Good morning, everyone. Thank you for coming. Let me know in the chat room if you can hear me okay. I know it's not the best microphone. Hopefully next week we'll have a better one. Please let me know you can hear me. All right, thanks, Rick, and good to see you again. Cool, so let's go ahead and get started. Looks like we've got 13 viewers here today. Be really great if you let me know where you're from and how long you've been trading options. How new are you? Thank you, Luis. And then I'm going to get started. Now, some of you may have never traded options. You might never traded stocks before. Maybe you've never traded options before. Maybe you never traded the wheel strategy. And some of you have been through this before. And that's great because I'm going to try and keep mixing it up each week and add a little bit of something new to it, so that even if you've done this before, it's good to have a refresher, but it's also hopefully you're picking up some new tidbits. So with that out of the way, let's get started. Awesome. I lived in Vegas for 3 years. That's fun, man. All right, cool. Why use the wheel? It's about risk, reward, and convenience. Convenience is a big part of using the wheel, why I like to use it, why it's one of my favorite strategies. Okay. Another reason, you're using the same methods as finding good companies to buy and hold. So you're probably already doing half the work that you're going to do if you're going to do the wheel. In other words, let's just say you're a normal buy and hold investor, or you're going to hold for 6 months. Well, that's the research that you would have, that's the important part of the research that you would need to run the wheel anyway. So you're probably already doing half of that. Now, once you find those decent or good companies, even if they go sideways or even down a little bit, you can use this strategy to reliably make 1 to 5% a month. Trading good companies. Again, I stress that a lot. Good companies is where it's at. Now, I'll show you how can you reliably make 1 to 5%. You can sometimes make more. I'm not saying 5% is the most you're going to make with this strategy. What I'm saying is reliably you can get within that range, and I consider 5 to sort of be on the edge. Right now, I'm aiming for 4%. Last year, I was aiming for 5%, and I got 5 to 7% a month last year. Okay, but it's up to you how you want to tweak this, whether you want to go for higher risk, high reward, if you want to go for lower risk, low reward, okay? The other great thing about it is it is set it and forget it strategy. You can literally put a trade on and then check it 30 days later. I mean, you should check it more often than that, but you don't have to take another action most of the time until it gets close to expiration. Hey, that's great, Jan. That's a lot of experience. Holy smokes. Cool. All right. Another great thing is, like I said, low time commitment. If you've got a full-time job, if you want to spend, right? If you've got a full-time job, trading can be difficult. If you're retired, you don't want to be sitting in front of your computer all the time. You want to be at the beach, on the golf course, hanging out with your friends. You don't want to be sitting in front of a computer trading all the time. This is a strategy that supports that. Okay? You can work a full-time job, use a strategy. The other great thing I really love about this is what it's called DSP, downside protection. You get 10, 15, sometimes 20% downside protection on every trade that you're making, and I'll show you how to calculate that and how it's built in, because it's amazing. And yet another thing is you can actually calculate it before you enter the trade. Max profit is also known before you enter. Unlike when you're buying a stock hoping that it goes up, you have no idea what you're really going to make in the next month off of that. This one, you have a very clear trajectory. You have a clear goal in mind. Very important, if it does start to go down, there's a clear recovery plan, pathway that's built into the strategy. Another thing that I didn't know when I got started, but I learned, and it's a really important thing for your overall growth, is that you can close early, and when you do so correctly, you're limiting risk and you're actually accelerating ROI. You're causing your APR to go up when you close early correctly. You do not have to hold to expiration. A lot of people, I think, get scared away from the max loss, and they get scared away from this idea that they have to hold till expiration. You can exit the trade early. You do not have to hold it once you sell it. All right, why use the wheel? Stocks may change, but the strategy repeats every month. Every month you're doing the same thing again and again, just on different stocks. You look for the same things. You look for the same setup. It's a very repeatable strategy. Unlike some things, might be high risk, high reward, but you can't actually repeat it again. You have to wait for this perfect setup, or you don't know when you're going to be able to repeat it again. I use this strategy reliably every month. It's super repeatable. So, for the new people, quick refresher. What are options? An option is a two-sided contract between a buyer and a seller, not between you and the broker. Okay, the broker facilitates it, but they're not taking the other side. It allows a buyer to trade 100 units of stock at an agreed upon price. We call this the strike price. It's not the same as the stock price, by a certain date. For this contract, the buyer must pay a premium. And if we are selling the contract, we receive that premium. So the contract is between a buyer and seller, and the broker is the middleman. Okay? And that's what's great, is we get to take the other side. So let's use an example. Virgin Galactic, ticker symbol SPCE, space. Stock price was around $30. I don't know what it is today. I'll check it later. But if you were to buy the May 7th $30 call, it would have cost you about $3.50. Samaresh Gupti, does it give 5% return for low volatility stocks? Absolutely not. Well, you can go closer to the money, but not with my strategy. You have to use high volatility stocks and options, okay? All right, moving on. If you were to buy the $30 call, you'd have to spend $3.50 per stock. Remember, we're operating in units of 100 stock. Therefore, the buyer must pay $350 plus some broker fees. The seller, you, us in this example, would receive $350 minus the fees that you also have to pay to the broker. Okay, moving on. Buying options versus writing options. Writing and selling options, shorting options, it all means the same thing. When you're new, it's easier to think about it as writing an option. You're writing the contract that somebody's buying, okay? That's how you get across this. Some people think, well, how do you sell something you can't buy? It's because you're writing it. It's because you're writing it, okay? You're writing the contract and somebody's buying the contract from you. Now, I don't mean you're physically writing it. That's just what it's called, okay? Buying options. If you're buying a call, you're mostly doing it for high leverage. You want a high risk, high return. You think there's going to be some big catalyst that's going to cause the stock to go up, and you want to do that. Problem is, time is against you. Time is against you, and it can be so expensive that you end up paying $5, $10, $20 per share on a $60 stock. That means it needs to move up $5, $10, $20 before you see any profit. That's why it's high risk, high return. Put is very similar, except it gets used a lot as insurance. It gets used a lot when you're hedging. If you own a lot of a stock, you'll buy a put to protect yourself from it going down. Or another example, let's say that you're long EVs. You believe that the EVs are a really big play. And so maybe you're going to buy a lot of Tesla, but you can't afford the risk of Tesla going down. So maybe you buy a put on a competitor like Lucid or NIO or Helion or some other company. This removes your market risk and your sector risk, and it basically narrows you down to just betting on Tesla versus other EVs. So you could use a put as part of the strategy to do that. That's why there's so many buyers for puts. You could also just buy a put if you're betting that a company like Lucid is going to go down. I don't recommend this, even if you think you're right, because it's so hard to time it, okay? That's the problem with buying options. Time is against you. Writing options, stock covered call. Stock covered call. You're covering the call with the stock. You're not covering it with cash. You earn monthly premium. You lower your cost basis. You create downside protection, and you put time on your side. Very important. When you're writing options, time is your friend. It's not against you. Every month, every day, the time value of that option that you've already sold is going down. You want that option to expire in your favor. Same with the put. You're earning monthly premium. You're lowering your entry price by a lot in some cases. You're creating downside protection, and again, you're putting time on your side. It's a very important concept to understand. Buying options, time and movement, direction is against you. Writing options, direction and time is on your side. The wheel strategy is not a spread. It's not like an iron condor or anything else. It's a simple two-step strategy. First, we sell a cash covered put. We call this CCP or CSP. Cash secured put, cash covered put means the same thing. Our broker is going to take the strike price times 100 shares, and he's going to lock that away in our account until that option expires. So that means that he's covering the contract with our cash. That cash is locked away. We cannot touch it. It must stay there. Then step 2, if assigned. Assigned means that we own the stock now. The put failed, not in our favor. The put failed. We now have to buy that stock. We turn around and sell the stock covered calls. So we make premium when we sell the put. We make premium when we sell the call. How we're doing so far? Are people starting to get this and understand this? Let me know in the chat below. We're going to move on to an example. We're going to use Virgin Galactic again. Let's say you find a good long-term company and it needs volatility. Just like, what was the name again, was saying? Samaresh was asking, do we get a 5% return for low volatility options? I don't recommend that. Your cost basis will be too high. We're looking for stocks that are good with volatility, not stocks without volatility. Let me know in the comments below if you can still hear me and everything is going great. Am I making sense? Do I need to slow down? Give me some feedback, please. Okay, moving on. These are the option chains. An option chain should include the date, the strike, and the bid. The bid is what we're going to use as our premium. You can put in any number that you want to try to go for, but I'm going to show you why we're going to go in at the bid. Or what I like to do is go in at the bid, at least for our calculations. Anyway, let's keep moving. I don't want you to get confused, and I'm starting to confuse myself. I want you to pay attention here to the $26 bid. Okay? Remember, in this example, Virgin Galactic was trading at about $30. So we're going to go 1, 2, 3, 4, 5, 6, 7 steps outside the money because it's 50 cents a step to the $26 strike. And we look at the last price or the bid. This one's showing me last price. It's okay. It'll be $1.34. Okay? We can also see that the open interest is 143. That's why another reason why I'm not want to go with the 27 to 25.50 is the low it's very low open interest. That's sometimes okay on some stocks. Open interest is important not when you're trying to get in. It's really important when you're trying to get out, if you're trying to close early. Let's keep moving forward. I want to take, give me a second. I want to always compare our strategies to a simple buy and hold. That's the easiest way to understand, okay? And it explains the downside protection, the cost advantage, and the profit advantage, okay? So let's pretend. Check the delta and IV. I actually, Brian, I'm going to tell you, I don't use delta as much. I know it's an easy reference. I actually use pop. Space has a 58% volatility. That's great. I love it when it's even better at 100% volatility. All right, let's compare. If I were to buy and hold 100 shares of space, that's going to cost me 30 times 100, okay? What's going to happen if the stock goes up, if it goes sideways, if it goes down? Let's take a look. Buy and hold strategy. If it goes up 10%, goes up $3, I'm going to make $300 in a month. We're saying in a month. If it goes sideways in a month, I make nothing. All my money was at risk. It was sitting in a stock. It did nothing for 30 days. That is not good. That's bad. Okay? Scenario C. Opposite of scenario A. The stock goes down 10%. It goes down $3. I lose $3 for every share. Remember, we're doing 100 shares. When we're in a buy and hold situation, we have a very simple 1-to-1 ratio. Every dollar it goes up, we lose $1. Every dollar it goes down, we lose $1 times the number of shares that we have. So we're going to lose $300 in scenario C. Scenario D, it goes down $4.50. We lose $450. You can continue to read the rest. Now, moving on. What if we instead sold the $26 put, just like we talked about? I'm going to say, instead of $1.34, we're only going to get $1.30 in premium. We're going to undercut the market. What's going to happen? First thing you want to calculate. First thing you want to calculate is, what is your break even? Your break even is 26 minus the premium. So you have a break even of 24.7. This also creates a break even percentage of 17.6. I'll explain what that is later. Right now, I want to focus on that break even part. So, stock goes up. Scenario A, stock goes up 10%. Buy and hold guy, he makes $300. It's okay, you make $130. Almost a third, actually a little bit more than a third of what the buy and hold guy got. But here's where it gets good. It goes sideways for 30 days. Buy and hold guy got nothing. You, because it expires above $26, it's above our break even. Actually, it's above $24.70. It's above our break even. You're going to still collect $130. That's what's amazing. And here's another great part. You're collecting it from day one. Day one, it's going to subtract the cost from your covered put. You could use that money, day one, to actually go and buy 6 shares of Virgin Galactic if you wanted to. Not 6, sorry, 4. 4 shares of Virgin Galactic. Okay? You can use this to acquire shares. You don't just have to use this to acquire cash. Option C, scenario C, it goes down 10%. Buy and hold guy just lost $300. That's losing $10 a day for putting his money into that company. That's bad. Okay? We're still above our break even. Our break even was 24.7, not 26. Our break even is 24.7. We collect $130. Scenario D, 25.5. It's above our break even. We get to keep that $130. We might get assigned the shares. If we get assigned the shares, it's okay. We collected the $130 up front. We subtract the price of our shares. Then we turn around and we could sell the shares, still keeping our profit. Or we can sell a covered call. Now, it does have a bad scenario. It's not a perfect strategy. There's no such thing as a perfect strategy, but it's better than our buy and hold guy. Let's show you how. Stock goes down to $24. Mr. Buy and Hold just lost $600. We had to buy the shares at $26, but we remember we collected $130 up front. Our break even is $24.70. We lost 70 cents a share, not $6 a share. We only lose $70. That's why this strategy is so safe. It's safer than buy and hold. I feel very confident saying that. When you do it correctly, it's safer than buy and hold. Then we get really bad. Option F, scenario F. Stock drops 25%. Buy and hold guy loses $750. We only lose $220. That's a huge difference. It's a huge difference because think about what has to happen just to earn your money back. If you're a buy and hold guy, if it goes down 25%, you lose $750. You need the stock to go back up 30% just to get close to breaking even. It goes down 25%, now you're at 22. You need it to go up $7.50, so you actually need it to go up about 33, 38%, okay? We're in a much better situation. We only lose $220. If you want to break even, it only needs to go up $2.25. You guys see what I'm saying? Let me know if this makes sense in the chat below, because this is really powerful, important stuff if you're just a buy and hold trader. Buy and hold guy, it has to go back up $7.50, not to make a profit, but just to break even. In our scenario, imagine if that happened. Once it goes back up, $2.50 to break even. If it went back up $7, guess what happens? You collect $500, right? Same scenario both times, right? Buy and hold guy, it goes down 25%, then it goes back up to where it started. He loses $750 if he didn't hold in that scenario, if he sold at any point, okay? Whereas us, we get assigned the shares. it goes from 24/7 back to 30, we make $500 plus and whatever premium we're getting. Okay? This is why I love this strategy. And yes, this does sometimes happen. And Samresh had another good question. I'll answer it later. Calculations. I want to get the calculations. It's actually really simple. It's actually really simple. Let me get my handy dandy calculator out. Okay? Remember, we said we had $1.30 in premium is what we were calculating. And then the share price, sorry, the strike price, not the share price, the strike price is 26. So we take 1.3 divided by 26. That's how you get 0.05. No complicated spreadsheet. You can literally do this with your calculator every single time you're looking at the option tape. And then you start doing them in your head. You're like, that's about 5%. That's about 4%. You bust out the calculator to get the exact number. It's so simple. You can do this in your head most of the time. Hey, APR is a little bit trickier. A little bit trickier. You have to take 365. Oh, I have a problem in my spreadsheet, my slide here again. Well, let's go back to that. I need to fix that. Bear with me. Boop. All right. Remember, we're doing this live, folks. Not everything's perfect. Hey, you got to take 365, divide it by the length of the option, the DTE, days to expiration, DTE, where you said we were going 30 days out. So you take 365 divided by 30, then you're going to go ahead and times that by your percentage. It's a 60, almost 61, 60.8% return. You're welcome, Willow. Thank you. South Florida, awesome. I lived in Orlando for a long time. Okay. Please don't look too much into this. There's a lot of scammy people who talk about compound growth. I'm not trying to razzle-dazzle you. Just telling you you're going to turn $100 into $1 million in 40 months if you just compound at 20% a month. Okay? Let's be reasonable. But if you did take and set a goal for yourself, you took $10,000 and you said you want to be conservative and you want to make 2% a month, okay? That's not 24% a year. After compounding, it's closer to 27%. If you take 5% a month as your goal and you actually achieve it, which happens in a bull market, okay? Very hard to do in a bear market. I want to be clear up front. This is a bull market strategy. It works best in a bull market, okay? 5% a month compounded for a year is not 12 times 5 for 60%. It's compounded to almost 80% return. And I'm going to tell you honestly, over the last 10 months, maybe 11 months now, I'll have to check, but over 10 months, I grew an account from 25,000 to 43,000. That account only uses this strategy. That account does not do any other strategies. It does not do buy and hold. It does not do anything like that. Marco asked how I can calculate the implied volatility ratio or implied IV. Yeah, okay. We just say IV, implied volatility. We don't. I don't, okay? Okay, I am using TWS. Is that Tastyworks? Is that Tastyworks? IB. And in the top right corner of the option chain, I can see a value related to the expiration of the options, right? On the Tastyworks platform, you can see directly the IVX. What does it mean? Implied volatility. They also, okay, Tastyworks also has implied volatility index. They also have the implied volatility index, which lets you know it compares the stock to itself. It's telling you how high the applied volatility is compared to it is usually. Interactive brokers, yes, I've used them before. I don't use them anymore. I don't know their UI. I didn't like their UI. And the worst part about interactive brokers is I got bad fill on interactive brokers. I don't care about a company's commission structure. I'd rather pay more and get better fill. I lost $6 per contract with IB. I placed the same trade at the same time in Tastyworks and got $6 per contract better in Tastyworks. So I use Tastyworks. I have a referral link to Tastyworks below. I do recommend them because I use them. I'm going to keep moving forward. Okay, let's go ahead and do this together in Tastyworks since we're talking about it. If you were to come up here, top left, and you search SPCE. It will give you space. It will also give you the IVR, IV rank. Okay, I called it IV index. You were correct, Marco. I was wrong. It is IVR for IV rank. It is ranking it compared to itself, I believe. I don't use IV rank a lot or enough. I should use it more. Okay. Here it's telling you what the price of it was. Okay. We're going to go out and we're going to choose the May 7th in our example. This is example only. I would not trade May 7th if it's having earnings on May 4th. Let's move forward. Here's our $26 strike. Now notice up here we have the bid column. We have an ask column and we have a last column. This last column, this last column, you can change to a lot of different things, okay? So you might put your deltas there, you might put your implied volatility, okay? But for this example, I put the last there, so you can see that this is the same as what you saw on Yahoo Finance. Yahoo Finance defaults to showing you the last. When I'm looking for options, I default to the bid, and then maybe a few points between the two, but I'm usually trying to get as many contracts filled as possible, so I'm not trying to calculate between the two. I'm trying to calculate at the bid. Let's move forward. Okay, other thing you can look at if you're new to Tastyworks, this is called the ITM line, the in the money line. This is letting you know, okay, stock is 30.70. This is the in the money line. The stock is between these two places. So if you wanted to sell at the money, you'd be over here. For this strategy, I like to be out of the money. Out of the money as far away as possible while still making my percentage and still getting my pop. I'll show you the pop. Okay. Oh, Marco, IVX is just implied volatility. I don't know why they put the X. I don't know what the X stands for. I'm sorry. That's the implied volatility that you're looking for. Okay. Here, if I select the 26 and I click on bid, okay, this is going to start. It's going to set it up as if I'm selling. And I want to do that because that's how we start this contract, how we start the wheel. We sell a cash covered put. So we click on the bid. If you click on ask, this is going to turn green and it's going to say B1 instead of S1 because it thinks that you want to buy the put. It thinks that you want to buy the put when we're trying to sell the put. Okay. Down here, you'll see pop. This is what I use instead of delta. A lot of people use delta. There's nothing wrong with delta. Okay. But it's really, most of the time, an approximation for pop. So I'd rather just use pop. Pop stands for probability of profit. If I place this trade just on the price history of these options in the stock, I have a 75% chance of not getting assigned. Okay? If you come down here, this is where you can change the price. If you will go all the way to the natural, you're going all the way to the bid, you're only getting 99 cents. If you come to the mid, you get $1.25. Okay? If you go to the top, you get 151, but you're unlikely to get any fill. You're unlikely to get anyone buying it at that price because you're selling too high. Okay? So typically I'm just right at the bid. But you can go between the bid and the mid and you can still get some fill. We did that yesterday with GRWG. We locked in about $219 profit by doing that on each trade. Okay, moving forward. If you go off of the table and click curve, it will show you your profit curve. This is showing you where the stock of the price is, where the price of the stock is. You can't see the bottom section. You can't see the bottom section. You can see enough of it. I can anyway. I'm looking at the screen on another screen. Right? I'm looking at my own video on another screen and I can see it. Why can you not see it? Alright, let me know guys, is Tim the only one who can't see it? Is it a Tim issue or is there another issue? Why can you not see it? Alright, here, just for Tim, let's go ahead and back this out. Can you see everything now? You can see the price goes here, the pop goes here. You can use the price slider down here. Can you see everything now? You can see the price review and send is over here. So if you wanted to make the trade, you could do it. You can use the price slider down here. Can you see everything now? You can see the price review and send is over here. So if you wanted to make the trade, you could do it. You can use the price slider down here. Okay, Tim's on a phone. Get off your phone. Don't text and drive. No, I'm kidding. Anyway, let's keep going. Okay, so we've got the curve. Don't text and drive. No, I'm kidding. Oh, you're getting feedback. Thank you. I will I will turn that off. Thank you. Sorry about that. Okay, moving forward. If we come and look at the curve, this is especially useful for complicated trades. You don't really need this for the wheel, but in case you like to look at it. Here you can see your option, the stock of the price is the donut. Here you can see where you're selling the put. It's got a nice big red flag. It's a 26 mark. And it shows that as long as you stay above 26, you're getting maximum profit. That's why it's green. If you go below 26 to 24.70, you start losing profit, but you're still profitable. You're not losing money. You're not losing money, you're just losing a little bit of profit. When you go below 24.70, you go into the red zone and you start losing money. How much can you lose? You can lose whatever the stock price is. So 24.70, sorry, whatever the break-even price is, 24.70 times 100 is your max loss. This doesn't happen very often as long as you trade on good companies. If you trade on bad companies, that's where you run into trouble, okay? Moving forward. Moving forward. This is what it looks like when you get to the confirmation window. Should show -1 here because we're selling, we're writing this option. So -1 at the $26 put, 31 days till expiration. We're going to go in at $1.34, just like it showed us on Yahoo. I'm not recommending that. I'm just using that as the example, okay? Estimated trade cost we're making. CR stands for credit. Make sure when you're doing this, you're getting credits, not debits. If you see a debit, you're doing something wrong. We're going to collect $134 up front. After commissions and fees, we're going to get back $132.86. So we're only paying $1.14 to open this trade, and there's no cost to close the trade on Tastyworks. And on Tastyworks, you can even get some margin on your buying power because it's discounting it for the price of the shares. If you get the shares, it's showing you what your margin will equate to. Very important for all you new people. If you ever need to cancel a trade, you go to activity before it goes through. You can't cancel after it goes through. This isn't Walmart. There's no buybacks, okay? Before it goes through, you can come click activity, right click on the line, anywhere on this line, and you can click cancel order. Always important to know before you open a trade how you can get out of that trade, how you can cancel. All right, we're at the 9:03 mark. We barely finished. I wanted to show you guys some more. I'm going to have to take out some slides and put in some slides to do it next time. Thank you guys. Let me know how I did. Did I do a great job teaching you guys today? I'm glad you appreciate it. Be sure to consider tipping us. You can tip through PayPal, Bitcoin, credit card. It is much appreciated. And if you want to sign up for Tastyworks, please use my referral link. And let's go ahead and give away some Discord invites. Okay, if you want a Discord invite, let me know in the chat room, and I will send it to you guys in a second. We have a fun Discord chat room. We have almost 40 users now. We've got less than 40 users, but they're people like you who have watched the stream, who have watched and learned how to use the wheel, okay? I can't vouch for how good they are, but you can continue to chat with me, and then be careful who you listening to in there, okay? Not everyone's vetted and tested and pro or experienced like I am, so be careful, but it's a good place to come and learn. It's a good place to share your ideas, to get feedback. There you go. There's an invite to the Discord, okay? But I'm going to turn that off in a few minutes. Okay, I hope you guys continue to watch, but that invite will not be good an hour from now. An hour from now, for sure, it's going to be turned off, okay? So go ahead and use that. All right, that ends the first segment, except I'm going to give a couple minutes for questions and answers. Somebody had a question that I didn't get to, I think. Who had a question that I did not answer? I'm looking through the chat. Do you use any technical analysis? Right, thank you. Samaresh. Samaresh asked, do I use any technical analysis? Okay, I am not one of these traders that likes to base a lot on the technical analysis, but let's give some examples if I can. We're going to do it now anyway. I want to look at DKNG. By the way, this is, excuse me, I got to clear my throat. Okay, here we go. So, Samaresh, this one's for you, buddy. You asked, do I use any technical analysis? The answer is yes, but I want to use it last, L-A-S-T. I do not want to use it first, okay? Just for you, let's go ahead and take a look at this. I'm not big on technical analysis. We can clearly see there's an uptrend. We can clearly see back here, we passed the golden cross here. We had the death cross or the T cross or whatever you like to call it, okay? Okay. I do follow this a little bit. I'm not a big fan of SMA 20 and 50. I prefer 30, 60, 90, and 365. SMA 20 and 50 means absolutely nothing. Okay? I don't even know if I can change it on this website, but here's what I do look at, Mr. Samaresh, and I'm sorry if I'm saying your name wrong. I'm doing the best I can. I do like to see where the previous ranges are. So if I come back over here, I can see that we had a lot of activity. And the 35, the 32, the 35, okay? I can see we had a lot of activity here. We didn't stay very long here. Then we had some nice activity here. And so if I was going to do DKNG just off of the chart, okay, which I don't do, okay? I'm just doing this for you, Samaresh, okay? I will look and try to make sure that my put that I'm selling is somewhere at what you would call a resistance level, what I call a trading channel. I want to be somewhere here. So for example, if we were selling this today at 62, we can see that there's a lot of support and activity in the 50. So I want to be somewhere in the 50. Okay, I will answer the other questions in a second. I want to take a look at the stock. If I don't answer your question, just ask again later and I will try and answer it. So I am actually looking at DKNG. We've got 23 minutes before the market opens, so I'm going to try and take a look at this to see if I want to check this out. The reason I'm interested in them is they got approved. This says front runners. I thought they were already approved. I believe they were already approved for the New York sports betting. Okay, New York is going to take 50%. That's the downside. I don't like that. They're taking a lot out of us shareholders' profits out of the company. The other thing I like about DraftKings is sports betting is supposed to be huge. It's supposed to have 7x growth over the next 5 years, so it's a good sector. It's a sector that I'm interested in. Okay. The other thing I'm interested in DKNG is that they're doing something with Dish Network, where if Dish Network, you can go ahead and ask your question, Rick. I saw it there for a second. I'll answer it later. But DraftKings is doing something with Dish Network where you can actually bet live if you have a Dish Network and you're watching through Dish Network. So I think that's a really, really big thing. Here we can see the revenue is quarter over quarter over 232%. I don't really care about market cap because I know they're already the market leader in the US. No dividends. Okay, short interest is low. Okay, that's good. And it's good and bad. It's actually nice that they short it and cause the price to go up. Insider ownership is relatively high. It's above 50%. That means there's a lot of smart money on this. There's a lot of people that want this to go up a lot. You got 16% insider ownership. That means they're going to be putting in the extra hours to make this work hard. I do care about that. Quick ratio, I like to do my own. Quick ratio is important. If you don't know what that is, you should go research it. Okay, moving down. I want to look at insider trading to see if there's any sales or buys recently. Jason Robbins, looks like he got shares at 382. Looks like he's cashing in his option and buying shares at 382. I don't know how to know, sounds funny, if this option is him selling or this is option of him buying and getting it. What I really hate to see, if we come here and look at it, what I really hate to see is if we see CFOs and CEOs, Chief Financial Officers and CEOs selling shares. That's a huge red flag. We're not seeing any of that here, so we can continue moving down. By the way, this site is Wallmine. It's free for now. I do believe they're going to go premium later. Okay, we don't like this, but it is. I know already that this is a growth stock, so I know that they're going to be losing money every quarter. I do need to calculate how many quarters they could survive. And I do need to check, yes, we are looking at the quarterly. Very important when I'm doing these, I'm going to take the liability, 742, and I'm going to divide it. Excuse me, talking while typing while calculating is hard. I want to see what their debt ratio is, just as a basic number, 0.21. This is actually very good. 0.21 is very little debt. I'm very confident that this company could go out and borrow another 30, 40, 50% from banks without having to dilute shares. So this is good for me. I like this. 21% debt ratio on a growth company. Next thing I want to do is I want to take this quarterly amount that they're losing. I'm going to see their total assets. I really should check cash. Let's do it with cash. Okay. Let's take their cash on hand. They could borrow a lot more, so I'm actually not that worried, but I'm just doing it for you guys. Okay. I did something wrong. Let's do that again. 2104 divided by 266. They could survive another 8 quarters just with their cash on hand. So what does that tell me? It tells me, as a guy selling a put, that if I put my money on this company, put my money on this put, it's funny, right? They could survive 8 quarters just with their cash on hand. I'm not going to watch my shares go to 0 inside the next quarter. It's just not going to happen. So I feel very safe putting a 30, 60, 90-day trade on this. And I'm going to answer that question from Ian Drapeau. I hope I'm saying that right. Ian Drapeau. Is it a good idea to wheel on days to expiration DTE 7, 14, and 21? I tell you what, I'm giving my own personal experience here, Ian. You get less break-even percentage. You get less downside protection when you go less than 30 days out. You're also in a situation like, let's say implied volatility is high today. If you do a 7-day trade and the volatility goes down next week, you can't sell it for as high. 7 days can generate a lot of profit as long as the implied volatility stays very high. But what I like to do, especially if the implied volatility is only recent, is to go ahead and lock in 30, 60, 90 days of that high IV price rather than get a 7-day price, and then in 7 days the implied volatility could be lower. Okay, so I prefer to trade 30, 45, and 60 days on the wheel. All right, let's continue moving forward. We've only got 17 minutes before the market opens. Okay, I use Wallmine, but let's also go ahead and check out, I want to check out the news, Google News, and I want to check out finance on this DKNG. Because I'm going to see if I can place a trade today. If you stick with me, you guys get to see me place a trade, and I'll go ahead and give an example of a covered call as well. Yeah. Poor Prince Philip. All right, 4 stock trades for Wednesday, blah, blah, blah. Real money. Okay, I'm not seeing any news besides is it a buy, why it went up, why it went down, stuff I don't care about. DKNG. Marilyn, I will answer that question in a couple minutes. Thank you for asking. I will take a look at that. And good time for warning. I'm not a financial advisor. I am not a licensed trader or a licensed insurance salesman, so I cannot call myself a financial advisor. So I'm only telling you what I would do, not what you would do. And if you could word your questions as if what I would do, in other words, use the you instead of the I for yourself, it is appreciated, because I should not tell you what to do with your money. I don't know your life situation, but I will take a look at that. Balance sheet. Okay, I'm going to go ahead. Let's go ahead and do this on DKNG. Let's take a look at it. I haven't looked at the chains completely yet, but I'm going to do a live one with you guys. I'm going to take a look at DKNG and see if it's worth doing it. I'm not seeing any earnings dates. Where are they based out of? Are they not based in the US? February 25th was their last one. Okay, so they haven't announced their future earnings date. That's why we're not seeing any. That's actually a really, I want to point that out. It's a little hard to trade this month because there's so many earnings dates coming out, at least on the companies that I care about. Okay, they're out of Boston. Good. Okay, so I want to come over here. I want to look at the implied volatility, 59, 56, 56, 58, 77. Okay, that's May. It's 35 days. So I'm going to click on May because it has the higher, right? I can trade, I'm happy to trade 28 to 60 days out. So I'm going to go where the implied volatility is the highest. Thank you, Marco. Let's take a look at the 45. We'll see what 45 on the May 21st. Okay, I'm not going to do May 21st. I'm going to look at May 14th. Okay. You see May 21 earnings for DKNG. I mean, that makes sense because their implied volatility is here. But it's not showing up under Tastyworks, and it's not showing up under Yahoo, and they already did it in February. February, March, April, May. Okay, it does make sense to do it in May. Okay, so I'm going to assume that you're right. I'm going to assume that they're doing it, excuse me, in May. And you said it was May 21st. So that's why, okay, so May 14th, we avoid it. May 14th, I mean, we might, okay, so I need to make a note of that. I'm going to write that down because that means I might want to close this early. If we know that it's coming out on the 21st, if there's somebody knows some insider information, it starts going down a week early, so we want to close this one early. I got to make a note of that. DKNG, close early. So we have extra reason to close it early. Okay, I wrote that down. Let's take a look. First thing I want to do, I know we're not going to sell at the money, but for all you newbies, okay, first thing we want to do is just take the at the money and figure out what the percentage is. That's not high enough. That's not very good, okay? If I'm only getting 6.5% at the money, it's going to be hard to get 5% at a more sexy price. You will notice, however, there is a big difference between the bid and the ask, except that the last traded was closer, it was under the bid. So yeah, that's not looking very good for us on this one. But let's dive in a little bit deeper here. 59, 325 at 59. Last was at 433. I might have to trade this one live. I might not be able to put this in early. 3.25 divided by 59, 5.5%. But we're not getting much of a discount. Our break even would be 59 minus 3.50. Sorry, 25. That gives us a break even of 55.75. According to 61. See, our break even percentage, I didn't fully explain this to you guys, but our break even percentage here is only 8.6% when we're trying to make 5%. So that means we're really only getting 3% discount off of our strike. I'm trying to get 4 to 5% on my trades, Mr. Marco. I'm trying to get 4 or 5%. Last year I was at 5%. I think that volatility is down a bit. I think the market's a little bit shaky, and I want to diversify. I want to look at more choices, so I'm lowering my goal to 4%. But I don't know if we're going to trade this one today. 2.29. Yeah, I mean, as soon as you get down to the 58, that's where your 4% is on the bid. I mean, we've got crazy prices here on our bid versus our last versus our ask. Okay, so let's just go and try and do something here. Let's look at the last instead of the bids. Take 2.10 divided by 55. We get 3.8, which is not very good. Okay, 3.8%. 55 minus 210 divided by 61. Okay, that will give us a good break even though. So if we can get a 55 at 2, we're getting a good break even, not a very high premium though, not a very high premium. So I got to think if I want this stock long term, because now we're at the situation where I'm just not getting a very much premium. I'm getting okay. Some of you might be very happy with that premium. The break even is okay, 61 versus 55. Let's go look at the pre-market because we're not. Tastyworks unfortunately doesn't show us the pre-market. 7 pennies, which is like nothing. We're basically doing nothing pre-market. Let's go back and look at this again. Our channels between 45 and 55, 45 and 50. What did I say we were doing, the 55? No, I'm going to take a pass, okay? I'm going to take a pass on this one, or at least I'm going to put it on my watch list instead of doing it today, because we're just not getting enough discount. If this thing starts to go south on us, we might be okay at this previous channel. I do like that it's got a 7-year. The sector is good, 7 years out, but I don't know if it's worth the risk. So we're going to take a pass, at least for now. I might change my mind in 10 minutes. We got 10 minutes to go. Okay, let's go to Marilyn Byrne. On April 7th, so 2 days ago, you purchased 100 shares of Viac. I don't know what Viac is, so let's look at that. All right, I'm assuming that's Viacom. Big. I think that's internet and maybe some teleservices, right? For $45.65 and sold one Viac $48 call for $159. I feel like the trade has turned against me because where are we at? 42.48. You purchased it at 45.65. 45.65. Okay. And you got a $1.59 credit, right, on the 48. You got a $1.59 credit on the 48. So your cost basis is really closer to about 40. Am I doing this right? 43, 44, 44. Your cost basis is 44. You're already down to $2.25, $2.50. You're already down. No, $1.50. Sorry, doing quick math. Math while talking while streaming is not as easy as it sounds, kids. Okay. I want to look at their chains. Let's go to Tastyworks for their chains. Oh, they've got high implied volatility. I was thinking that Viacom might have low implied volatility, but it's actually pretty high. Okay. And you sold the, you sold the 416. You only went 8 days out. That's why you're only getting so much premium. Okay. So me personally, even with my covered calls and my covered puts, I like to go 30, 45, 60 days out. You get more premium. You create more downside protection. You're locking in that high IV, making sure that if the IV goes down, that you got a nice piece of it. But earnings are coming out May 6th. So what, I got to pretend. Okay, what would I do if I had this trade on? What would I do? And you already did the 416. 416. And you did the 48. Okay. You did the 48. Well, I mean, now you put this on at $1.59, right? And then so now you could buy it back for 26 cents. So you could probably roll it forward, right? You've got $1.30 in credit basically sitting there. If you were to come before earnings to the 48, I think you could roll it. I might be mistaken because it's easier when I've got the stocks and the shares inside my own account, but I think you could roll it forward for another 60 cents and still be before earnings. But the other thing that I would have to consider, again, I should stop saying you. I could roll it forward for 60 cents. The other thing I'd want to consider is, am I really long-term bullish on this company? What is this company doing? What is its CEO doing? What are their products? Where are they gaining market share? You know, I have to do my fundamental analysis. So that's why it's going to be hard for me to give myself a real answer, because I don't have that real fundamental analysis. Other people, they just look at the chart, and it's kind of like looking at the moon and looking at the stars. It's just astrology. The chart did this, so it's going to do that next. Okay, well, it had a big run-up. It had a big run-up for some reason, then it had a big fall. That's what happens after big run-ups. Right? What goes up usually comes down. So it had a big run-up, now it's going to come back down. Why did this run up so much? What the heck is this? All right, let's come take a look at the news. Oh, are they part of Archegos? Are they part of that? Is that what happened? I don't know. You're in a tough situation, Marilyn. This stock I have no idea which way it's going to go. I have no idea if you're still bullish on it. You're not. I mean, if you look at the chart, you're not at a terrible price on the chart. But you got to figure out, is this company going up or is it going down? Like, what are they doing in the future? What caused them to go up? Obviously, something went bad with it. Okay, but what are their future prospects? Revenue's down. I mean, that's not good. That's awful to look at. Revenue quarter over quarter is down 62%. Let's go look at the balance sheet real quick. Okay, they reported in December. They reported a profit of $810. Although this isn't always the most accurate. Do not rely on Wallmine for the most accurate financial stuff. You know, it's nice because it's all there on one screen. Whereas on Yahoo, you got to look at a bunch of screens. It's not as pretty and all this other good stuff. But if you want to look at stuff, financials. If you want to make sure that you're doing it right, it's still better to use Yahoo, even though Yahoo doesn't seem to be doing anything else right in their company. They're still okay at that. Okay, so they have not reported since December. And assets, liability, let's go to cash flow, operating cash, end cash. Yeah, I don't know. I'm just going to say I don't know. If you feel bullish, you might want to keep it. If you feel neutral, you know, there's 9,000 other stocks to go look at. You know, why stick with something if you're not bullish on it anymore? That's my personal take on every stock. If I'm not bullish on it, I go find something else. Oh, geez. Hold on. Let's look at this for a second. 36.6 divided by 52.6. Is that 70? Yeah, 70%. I changed my mind. I dumped the stock. I mean, me personally, I would never have entered this stock with this much liability to assets. At 70%, banks, I don't know about for corporate, but for real estate, when you get to 70%, banks don't like to talk to you anymore. So I would dump the stock and I'd go find something better. I'm glad we found our answer. But that's up to you. Again, I'm not a financial advisor. I don't have licenses. And I don't know your personal situation. But if this was my stock, I'd go find something better. All right, questions. We got 2 more minutes before the market opens. I wanted to answer questions if anybody had any more. Did I miss any? I got Samesh's questions. Okay, I'm going through the chat to see if I missed any questions. Okay, if you're just tuning in, if you're joining with us, we have a Discord chat room. I'm going to thank you as the market bell opens for sticking with me. I'm going to hand out the Discord pass again. ASO was another one. Okay, let's go take a look at ASO. Thank you. Woo. As I get you that Discord pass. All right, 1 second here. There's the Discord pass that will expire in 30 minutes. After 30 minutes, that one is no good, so make sure you sign up right away. Thank you guys for watching. Let's go check out ASO. Academy Sports and Outdoors. I'm disappointed. I thought we were going to open up DKNG today, but I didn't see enough premium in it. That's a funky chart. Okay. So they probably did an IPO here in 2018. And they are on a very good trajectory upwards. Makes you wonder if there's going to be some profit taking eventually, though. Came in at 13, very healthy climb. Spiked a bit back here to 24, then 25. Now we're at an all-time high of 27. I don't like all-time highs for any of my wheel trades, but let's keep looking at this one. First, I got to figure out what they do. Academy Sports and Outdoors. Oh yeah, they got hit by COVID. Didn't they? When did they get hit by COVID? March. Oh, because they came out in October 2020, or is this a restructure or something? Did they go bankrupt and restructure? Anyway, tell me more about this company so I don't have to look up all of it by myself. But anyway, February we've got some insider trading. We're selling their shares at 20, so they were happy to get out. It looks like everybody was selling. Look at this. EVP and CMO, Chief Marketing Officer. Your marketing officer bailed or got. It could be all these guys got fired. First thing you want to look at, Marco, is if they replaced their entire management, because everyone started selling at the same price. I guess they restructured and got rid of their management, but you'd have to look into that. They're making money every quarter. That's good. They make hundreds of millions every annual. Okay, that's good. Debt, see, here we go. Debt's very high. 3272. 4384. 75%. I'm done. That's how easy it is. I mean, you go and you find 74% debt. You had insiders selling at 20. They're probably getting fired here. Okay, I'm just guessing. I'm not going to do any more research on this. And here's what I'm going to come back to over and over again. There's 9,000 stocks with options on them. If you find something really negative, dump it and move on. We're not in a rush. I should say this, okay? I'm only trying to do 2 trades a week. I'm very, very happy with 6, 7, 8 trades a month, because then I'm not trading too many. I'm not opening positions I shouldn't open. I'm not being lazy either. 6, 7, 8 trades a month is fine. So go find something else. So I'm done with ASO. Done with ASO. All right. Let's go looking for some stocks, since I had, well, let's take a look at, I had some left over from the other day. I want to see what Tilray is doing. Let's go see Tilray. Tilray is on a downtrend. Let's double check the chart. Yep. Tilray is on a downtrend. They were super hyped up. Yep, up to 31. They're down to 19. Holy smokes. Is there any bad news on Tilray? Lags market, what you should know. Explosion, blah, 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 blah. When was Tilray's earnings? I should find that out. Their earnings came out on February. We don't know their next earnings, according to Yahoo. Hey, who was the guy who gave me the last earnings that we didn't see? Was it Marco that told me? Where did you find the earnings, since I didn't see it on Yahoo and I didn't see it on Tastyworks? Where else should I be looking for earnings? I'm trusting the wrong sites. Conversations. Yeah, Tilray and AFA are supposed to merge, right? Why was it on your Tastyworks and not on my Tastyworks? That's super weird. Okay, March thinks there's Tim Osborne. Thank you, Tim. Yeah, I don't know why my Tastyworks didn't show it. Okay, here we can see earnings is coming out May 10th. We are April 9th, so we got 28 days. High implied volatility. All right, thank you, Tim. Appreciate that good advice. All right, see, this is what I like to see. Look at this. We got 10% at the money. That's the problem with the DKNG. We couldn't get it high enough. We couldn't get it high enough to do anything with it. Excuse me. 3.83 divided by 17. 4.8%. There's our 5% marker. We've got a 20-cent spread on the bid to ask. Coming in right at earnings time though, May 7th versus May 10th. Maybe I want to go sooner. Got high implied volatility here anyway. Okay, let's go take a look. 0.78, 17.5, 4.5%. I'm okay on that for this sector. And I've still got a 20% spread. I can try and squeeze some out. What is my break-even percentage? We got 17.5. Let's say we're going to do 90 cents, 0.9, 16.6 divided by 19.5. Invert it. We end up with 15% break-even percentage. It's not the best in the world, but I want to do more cannabis sectors because cannabis is big for the next 6 years. So let's go ahead and try and put this trade on. I want to do trades for you guys when we're doing stuff live. So if you guys are following me, today is the April 9th. We're going to open up Tilray 1750 to 21 day at April 30th. We're going to try and squeeze out 90 cents. Just double checking everything here. And let's see if we get one filled. All right, we got it working. Okay, I'm going to open this up so I can share it with the Discord group. I want my Discord group to get a piece of that. All right, I totally forgot to look at the pop, but 69% is right where I wanted to be anyway, so that's good. But I forgot to do that. In case you guys are following along, you saw me make a boo-boo there. I did not look at the pop before opening that trade. Always look at your pop. Trust your pop. He knows better than you. All right. You guys, if you got any more questions, if you've got any stocks that you're looking at, let's keep this chat room alive. Tell me what you're looking at, because I just did a trade on Tilray. We did. April 30th, 21 days to expiration, 1750, and we're doing it at 90 cents. But we'll see if we get filled. If you guys are following me, you guys might be outbidding me. You might be bidding lower than me and getting it filled, you evil bastards. But that's okay. Hope you guys get some fill. I just posted it. Tilray, sorry, not TLR. TLRY, Tilray. Cannabis stock. I'm going in at less than 5%. I'm only getting a 15% break even, but I'm very bullish on the sector, so I'm not too worried if I get the shares. Not too worried if I get the shares. I want to be very clear about that. This isn't a perfect wheel trade. This is one of those wheel trades where I might be happy if I get the shares. I do those sometimes. How you doing today, Wayne? You had a lot of great tips and a lot of great stocks to look at the other day. I know you're a very active player. I love that. All right, I'm going to keep looking. Triple D. I don't know if I want to do anything on them, but let's take a look at their chain. Man, everyone's doing their earnings first week of May. I hate that. First week of May earnings. Do not like that. Well, I don't care, except that we're exactly 30 days out. Normally I wouldn't care. I don't think I'm going to get anything on Triple D. I don't think there's enough juice in the pod. Come out to 22. We get 80 cents on the 22. That's only 3.5%. And then we're getting close to earnings. What if I got 90 on it? 90 on 22 is 4% only. I'm not that bullish on this company. I'm going to keep that on my watch list. Not doing Triple D today. I'm going to let my Discord group know. Triple D, add it to watch list. Not enough premium. Trade it today. And still want due diligence. Got to do more due diligence on this company. All right, let's close that one out, get that off the screen. Afria. Afria is the next one we're looking at. Marilyn Byrne asks, please clarify whether or not you purchased the stock as well, or do you just sell the put? So, strictly speaking, the wheel trade does not require me to buy the shares. So most of the time, no, I'm not buying the shares. Now, I have read some websites where they do say sell the put and buy the shares simultaneously. I do not do that. I only do that if I actually really want the shares. Yep. I only do that if I really, really want the shares. For me to really, really want the shares, I got to be happy with it for the next 5 years. That's how I do stuff when I'm buying shares. I take a 5-year, I ask myself that question. Do I want to date the stock for 5 years? Do I want to read their news for 5 years? Okay, that's the type of analysis I look at when I'm buying shares. Now, one thing that you could do on the wheel, because we didn't spend enough time talking about what happens when you get to the call side. What you could do when you get assigned shares is you sell a call and sell a put simultaneously, opening up, so you got 200 shares active at a time. Now, some people, I think what they do is they sell the put and then they also buy shares and sell the call, so they got both sides of the wheel going at the same time. I have not done that. I have not tried that. I would try that on a really good company. So if you haven't heard this from me 100 times today, find good companies. Then everything works out a lot better, and you can do a lot crazier stuff with it. You know, you can do everything right when you're with a great good company, and even if you do everything right with a bad company, you're still going to do everything bad and not have a good time. So, but if you're really bullish, to answer the question and to really clarify it, if I was really bullish on a company, you could buy 100 shares and run both sides of the wheel, sell the covered put and sell the covered call at the same time. You could do both. Boeing, I usually don't look at Boeing because it's so expensive. It's $251 a share. I don't like to do wheels over $100 a share, but I'll do it for you. You got a big enough account for this, Marcus, or am I looking this up for nothing? Because you got to put down 100 stacks times 251. That's a $25,000. Am I doing that right? $25,000 wheel trade. Let me know, Marcus, if you're going to be doing this one. If I look it up. All right, good for you, Marcus. Let's take a look at it. Okay. Yeah, here's our friend COVID, right? Boom, with COVID. Okay. These guys pay a dividend? No, Boeing does not pay a dividend. Come back up with a spike, come back up with a spike. Okay, first thing I got to say, I have not enjoyed the way management has handled the 737 MAX crisis. I don't believe that the insiders in the company are happy with management. They've been talking about the safety checks they've been skipping for a long time. So first thing I'd want to find out is how many managers got fired, how many CEOs got replaced before I touch this company if I were you. Okay? I mean, they're a big company and they're not going anywhere. We can pretty much bet this stock will never go to zero. But whether or not it's going to keep going up or keep having problems depends a big part. Okay, so Marcus, I'm going to cut it off here pretty much. I mean, I'll take a look at anything else for a second. Okay, actually, I'll make an exception this time. Normally, when I see this much debt, when I see debt inversion, right, we're still looking at 170% debt to 152 in assets. That means they're 111% collateralized. All right, they're underwater. This company should be selling off. This company should be breaking apart. Unfortunately, Boeing's in the defense sector. We need Boeing. All right, the U.S. needs Boeing. And so it's one of these companies that's going to keep getting bailouts. So this is, okay, so here's my opinion, Marcus. This is a high risk, high reward play. This is not a good play for me personally. I wouldn't run this on the wheel because this looks like a straddle play. This looks like a straddle play, and I don't do the wheel on straddle plays. This company could explode with growth or it could tank. And you never know what's going to happen. I mean, it's all going to be based on the news. If some big news comes out that they're not going to get a bailout, then this thing's going to tank 10, 20, 30, 40, 50%. If they get a bailout, then it's going to go up 10, 20%, you know? It's got a ton of institutional ownership still. It's a major company. It's a defense sector company. But why would you trade the wheel on this? I don't know why you would wheel this. Maybe somebody else has a really great answer for that. I would love to have a discussion. If somebody was like really good at the wheel and really good on Boeing, I would really love to hear the other side of this argument. Because I'm not saying I'm right. I'm just saying it's not the wheel in my wheelhouse. Man, funny jokes today. Okay, so sorry, Marcus. I think there's probably a different play if you're going to do this play. Maybe this is a long short play. Actually, you know, you could, like the basic hedge fund, 3-to-1 ratio, long short play. You find out what your stop loss would be, how much you're paying on your puts, and then you make sure there's 3 times the upside. If it moves up, you roll up your puts, you roll up your downside, and then you keep doing that until it finally hits your stop loss. So you got to run this with constant stop losses. I mean, that's how I would do this. I keep saying you. It's so hard not to say you because we're talking to another person, right? If I was somehow bullish on Boeing, I would go look to find another similar company. I would short that company. I would go long on Boeing, and I'd set my stop losses versus my soft target 3 times higher than my stop loss. Okay? If my stop loss hits, I'm done. I'm out of the trade. If it moves up to my soft target, then I'm going to roll my stop loss up to carry it up, and I would double down. I'd buy more shares, and I'd buy more puts while rolling it up, but making sure that I'm keeping at least 50% of the profits that I've gained. I think you run a hedge. I think you run the hedge fund strategy on this. I don't think you run the wheel on this. Any more questions? Any more stocks, guys? We got 13 more minutes. Does anybody here join late? Do you need a Discord invite? Let's give them out now. We got 13 more minutes. Light up the chat room. Keep it going. And I'm going to go look at the next stock. We looked at ASO. We're done with that. Afria Pharmaceuticals. I believe they were cannabis. Yes. Okay. They do pharmaceutical grade. Based out of Canada. Growth company. Losing 120. Assets to liability. About 3-to-1, so they should be fine. 918 divided by 2810. 33%. How good am I? Picked that right from thin air. They're losing 120 a month. They've got, whoa, they got very little cash on hand. Why do they got so little cash on hand? I mean, they can keep borrowing. Why are they carrying so little cash? Short-term investments, net receivables is higher than their cash on hand. Inventory is high. Right, the cash on hand. I don't like that they got so little cash on hand. No one's in the chat room. Everyone must be busy trading. That's okay. I'll keep talking. I hope you're still listening. If you can, type in the chat room. Let me know you're still here. Revenue quarter on quarter is 33% on Afria. Stock. Ticker symbol. Geez. APHA in the pharmaceuticals. Looking at the news. Nothing important in the news right now. Let's go look at the 6-month chart, the 3-month chart. They popped at 35, came back down. They're now and maybe, oh, they're crossing. No, they almost crossed. The SMA 20 almost crossed the SMA 50. Okay, I'm going to wait on this one. Yep, thank you, Wayne. Glad you're still with me. We got 12 minutes to go. All right, I've already done Tilray today. I'm going to do more research on Afria, so we're going to keep that one on the watch list. I'm going to keep moving. Tilray, Palantir. Palantir, I keep talking about you and I keep hearing about you guys. I never know what to do with you guys. You're such a weird company with such a weird CEO. You're at 23.77. You had a big pop in February to 36 and 32, 33. I'm glad we're not at your all-time high. We're back to a previous trading range. We've already crossed over the SMA. What is that? Literally a month ago, we crossed the SMAs and hit our we hit the downtrend before we hit the SMAs. Then the SMA had no effect on this almost. All right, let's go look at the option chains on Palantir. PLTR. I think we ran into the problem of earnings coming soon. Yeah, May 18th for earnings, not too soon. IV's only in the 70 range. I don't think we're going to find anything, but let's go take a look. Let's go back to the chart. If I got underneath, I got to get underneath the 20 to have any value here, to have any safety. I got to be under the 20. And at 20, I'm only getting for 38 cents. I think I need at least 58 cents. I probably need more than, no, I need $1. I need $1 at the 20, so I don't think we're going to get anything on this. Yeah, I'd only get 2% at the 20. Break even's crap. ROI is crap. We're getting $1.53 at the money at 23.50. So yeah, it's only 6.5% at the money. I need a break even below 20 to make this worth it. No. No, no, no. And I can't go any farther out because then I'd go through earnings. So I got to wait till May 18th to look at Palantir again. Okay, so putting this on the watch list, writing it down. May 18th, May 19th, we're going to look again at Palantir. Until then, we do not care about you. You are dead to us until May 18th. Unless there's a huge spike. There's a huge spike that causes the implied volatility to go up. We will look at you again, but I don't think so. Barring that, we will care about you. So you go on the watch list, which is sticky notes on my computer. And we keep looking. Palantir closing you out. AI. AI. What are you doing today? Did you go up or did you go down? You are down again. You're on a 6-month downtrend. I mean, you went up, then you channeled, then you went up, a little pop, and then you were on a downtrend. So I don't think we can trade you. Somebody else was really bullish on you, but you are in a downtrend. I like the sector a little bit. Some of the research I did on this is that AI is the solution that nobody needs. They're in a really big sector. There might even be a good company, but so many people are doing their own thing. Amazon is doing their own thing. Google's doing their own thing. They're going to try and be the Walmart of AI solutions for enterprise, but unfortunately, no one's really taking them up on the offer yet, is the word on the street. Their debt is really good, though. They've only got 10% debt. They've only got 7% debt. These guys have a ton of assets on hand. How much of that is goodwill and intangible? Wow, an AI company that has less than 1% of its assets and intangible assets. What the heck? They have so much cash. This is crazy. I mean, for an AI company, they're just super well funded and they're just sitting on all this cash. Insider ownership is 34%. Institutional ownership is 35%. This is just a weird company to look at. Revenue growth quarter over quarter is up 40%. Meanwhile, the stock is trending down from 170 to then, what is this? Then they came back to 150, and now they're down to 61. This could be an amazing long-term buy and hold. I mean, it's just such a weird company to look at. All right, they're based out of the Bay Area. Insiders were selling this month. We got insiders, not the company. We've got insider investors sold at 64, sold at 76, sold at 85. CEO sold a month ago at 84. He hit the top of the market. He did perfect on that. I guess we just got to avoid this company for now. It's such a weird company. If you guys want to check out a company, though, if you guys like to do the research and help, check out AI, because this is one of those companies that could be a sleeper. It could be a really big hit. They've got so much cash on hand. Their company valuation for an AI tech company. Yeah, lost. Yeah, I'm having some internet issues. If you didn't hear me for a little bit, I was talking about AI. They're sitting on so much cash for an AI company. It's crazy. They could buy Bitcoin and then say they're trading Bitcoin with their AI, and the stock would quintuple or even decatuple. Somebody give me control of that company, and I'll make us a ton of money. Somebody just give me the CEO role of AI. Somebody contact their board of directors and tell them to make me king, and I will give them so much money. Yeah, sorry about that, Wayne. Problem with living on an island. Doesn't matter which internet you buy. Sometimes they just go down. Okay, we only got 4 more minutes. 4 more minutes until I'm off the air. I appreciate you guys sticking around. If you didn't get a Discord invite, make sure you check the chat room. Check the chat group, blah, blah, blah. Right? Let me know. I'm going to post it one more time in case anybody didn't get one. Yep. But, you know, somebody reach out. Somebody look up the board of directors, find an uncle or aunt or cousin that's related to them, and tell them to make me the CEO of AI, and I will make that a $60 billion market cap instead of a $6 billion market cap. All they got to do is give me control of that company for a month. They have so much cash on hand, and they're not doing anything with it, and all their investors are bailing. Hey, thanks. Is it pronounced Jared or Gerard? A for Gerard, A for Jared, or B for Gerard? Let me know how you pronounce that. That's cool. Yeah, I appreciate you appreciating this. It's cool that you think this is a positive way to trade, and I hope you love. Yeah, you said you love the methodology. I hope you give it a try, and I hope it works out for you. Remember, though, this is a bull market strategy. This is not a perfectly hedged strategy. When I do it, you get okay. So Jared, right? Cool. All right, so this is a strategy that gives you 15 to 20% downside protection if you follow it the way that I follow it, but it's not perfect downside protection like you would get with a hedge fund. But, you know, even with those hedge funds, they still have stop losses set 5, 10, 15, 20% to the downside. So when they're wrong, and they're wrong 50, 60% of the time, they're taking a 5, 10, or 20% hit every time it goes down. So really, you think about it, we're kind of almost as good as the hedge funds with this simple strategy, and we're actually getting more rewards than a lot of the hedge funds will get. Hedge funds are happy to get 25% a year, and they give a ton of downside protection. They get rid of the max loss, whereas we still carry the max loss, but they have a stop loss where they're losing 5, 10, 20% every single time, whereas we have downside protection where we don't lose money until it goes down 15, 20%. So if it goes down 30%, most of the time, I'm only losing 10 to 15%. And then I sell the covered calls, I make it back. And then the stock goes up, I make it back. I think it's just an amazing, great strategy. And I'm glad you guys got to listen in today. I hope you learned a lot from it. If you didn't learn, you weren't listening enough, watch it again. And I'm glad you're part of the community. I want to know what stocks you guys are looking at. I want to know what trades you're making. I want you guys to be interactive in the Discord channel. Don't be afraid to post stuff in there. Don't be afraid to ask questions. Don't be afraid to tell people about what you're trading and what you're doing. Okay? I'm going to be in the trade room almost every day. I'll be answering questions. Don't trust everybody that you hear in there because, you know, a lot of them came from this channel. They might be new, but I'm going to be in there. And so I hope you appreciate what I do for you guys, okay? And Wayne Bicknell says the trick is picking the right stocks. Yes, company, right? It's about picking the right company. This is a bull market strategy, but it does rely on picking the right company. Whereas a hedge fund, they can do a pump and dump company. They can do a company that they're going to short, and they can create a strategy where they get low downside risk, triple up return on any company. But this strategy does require us to go out and find good companies. The good news is You're probably already doing that anyway. You've probably already been learning how to do that anyway. So it dovetails into what you already should know or what you should be learning. And then if you ever get the shares assigned to you, it's not the end of the world. You turn around and sell the covered calls. By the way, if you ever get to a point where the price has dropped so low that you cannot safely sell a covered call to make back all of your break even, you have a choice to make. It's not as simple just A, B, or just, if A, do A. It's a choice. What you do is you go and you research the company again. You start fresh, and you try and take a fresh set of eyes to it. You look at the news. You look at the financials. You look at the quarter earnings, right? If you're still bullish on the stock, I would hold it and hold on until it goes back up again, until it gets close enough to the break even where you can sell the covered call at or above the break even. If it's so low that you can't touch the break even, either sell a call right at the money to just get enough premium and let the stock get taken away, maybe even do weeklies at the money and just get rid of the stock, or even possibly if you actually have a negative view. If you have a negative view on the stock, just dump it. I would just dump it, sell it, and move on to the next stock. Again, all of my advice is what I do. It's how I look at things, okay? So if I say the word you, it's just I'm not used to the vocabulary yet. I'm talking about me. I don't know your financial situation. What I would do is I would sell, if I'm negative on the stock, I would just dump it. If I'm neutral on the stock, I would sell covered calls and let it get taken away. But if I'm bullish on the stock and I'm super far away from my break even, I just hold it. I did that with ClearSpark. It went from $12 to $8, and I found no good reason why. There's no bad news. I held the stock and I made 300% instead of 20%. It was fantastic. Instead of 5%, instead of 10%, I made 300%. That's what happens when you do this correctly using the wheel. You find a good company, you sell the put, you get in at a good price. If it's a good company, it should go back in it up again, okay? And you can make more than 5% a month. You can do what I did and make 300% in 3 months, okay? If you guys enjoyed this, please smash that like button. It helps the algorithm so we get discovered. Please subscribe. And of course, I sent you guys a Discord chat invite. Use that chat invite. Come to the Discord, join the community and chat. Please like and subscribe. I'm signing off. Have a wonderful day.